What's going on, motherfuckers? Throwing together a quick update video. This is not going to be the usual update video. I'm not going to be going over 10 charts. It's going to be a little bit different. I'm covering 2 charts today. The first one's going to be AMC's macro, and the second chart is going to be the flat portion. It's a chart I threw together last night. I couldn't paint the picture any more clear if I tried. These 2 charts is everything that you need to know about AMC. And the flat portion chart that I threw together, I absolutely love it. It looks amazing. Seriously, genuinely, it looks perfect. But before I get into the video, the price action this week so far, AMC, believe it or not, we're trending up. We're in an uptrend off of our all-time low of 652. We are trending up. We're in an uptrend, higher highs and higher lows. GameStop actually filled the gap. $13, $13.50, whatever it was, filled the gap on earnings into pre-market today, and then found a bounce and closed the day 10% in the green. That looks amazing. The macro on GameStop looks amazing. S&P 500 is knocking on the door of 460. And when it breaks that door, just like I break this wall behind me, it is going to see all-time highs. And not only that, when it does break 460, that is confirmation of a bullish market. And I mentioned multiple times over the course of my last couple of videos, market wide, throw a fucking dart. Generally speaking, everything is bullish right now. And if you look at the macros of all these charts, they are all, or not all of them, but a lot of them are coming off of their all-time low landmarks and now looking for the reversal into their bull phase. And that is not an exception for the meme stocks. And the great part about meme stocks is their bull phase is a straight line squeeze. I can cover it in AMC's chart. The bull cycle, bear cycle, when you get the reset into a bull cycle, it is a straight line to the top. And then it's a long dragged out downtrend all the way back down to the bottom, the bear cycle. And now we're looking for a reset into a bull cycle. But that's pretty much it. Across the board right now, generally speaking, everything is bullish. And SPY is moments away from breaking that 460 resistance. And that will be confirmation of a bullish market. And along with that, it will be seeing new all-time highs. But, all that aside, let's talk about AMC's chart. And this is the macro perspective from IPO, as always. I'm not going to really go through the chart the way I usually do, where you have your green and yellow, your January, June peaks. This is the bull phase of AMC. And the January and June equivalent peaks are right here and right here. This is the V shape, and then that is your macro break right there. And for the most part here, you are above the 200 EMA on the daily and riding it as support. And then when you get your macro break right here, this gap down, you get into the bear phase of AMC, where you break below the 200 EMA, and then you find your descending resistance and reject over and over and over again until you get to your flat portion. You play that out, and then you get the reset back into a bull phase. And again, the bull phase of AMC and pretty much all of the meme basket is a straight line squeeze. That's what we're looking for right now. So this is the bull phase of AMC now, straight line squeeze to the top, and then you have your V shape right here. You have your macro break right there, and then you break below the 200 EMA. And then you come up, you find your descending resistance, you reject it over and over again, and then you drop down to your flat portion, the reset pattern, which is where we are now, looking for a flip into a bullish phase of AMC, and that will be the squeeze, which will be a straight line to $1,400. I mentioned multiple times as well, the previous flat portion began in January 2020 and ended in January 2021 when you start the bull phase. The current flat portion began in 2023 and is going to end, it looks like it's going to end in 2024. So that is pretty much it for AMC's macro. I cover this in every single one of my videos. By now, you guys should be very familiar with AMC's macro chart, the macro perspective of this chart. I've covered this hundreds of times by now. So this looks good. Now what we're gonna do is zoom in to the flat portion of AMC, the previous flat portion and the current. And this is gonna look a little bit different than how I usually show it, but it paints the picture very clear. Before I do actually get into that, I want to mention something else, because for, you know, I guess the entire time I've been on YouTube, I have called this the flat portion. Really, that is a misleading name, because this is a downtrend, which is what AMC's macro is. You have your bull phase of AMC that you see here, and your bull phase of AMC that you see here, which is above the 200 EMA. And then you have your bear phase of AMC right here, where you break below the 200 EMA and you find your resistance. And over here, same thing, breaking below the 200 EMA and finding your resistance. And I mentioned multiple times, and this is not theory, this is a fact. AMC is January 15th every single day, over and over and over again. And the way AMC's macro works in the bull phase is you get to that breaking point, that volatility point of January 15th, and you break to the downside time and time again, over and over and over again. In this downtrend, January 15th, end of day, you break down. So you have your bull cycle, and then you get into the bear cycle. You have a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. Now this is where I was talking about the flat portion is misleading, because really, you know, for the sake of simplicity, it is flat, but it's not. It's a downtrend. So you have a lower low, a lower high, a lower low, a lower high, a lower low, and that is it. AMC's macro, like I just said, is January 15th over and over again in the downtrend, continuously breaking to the downside to a lower low until it reaches that reversal point, your all-time low landmark. And from there, you start your bull cycle, which you start forming higher highs and higher lows into the bull cycle that you see here. So higher high, higher low, higher high, higher low, and then you break back down into the bear phase of AMC. So you have a lower high, a lower low, 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 until you get to your all-time low landmark, which is where we are right now. So yes, I call this the flat portion, and I've been calling it the flat portion since I've been on YouTube for the sake of simplicity. But really, this is not flat. It is a downtrend. It's lower lows all the way down. This is a lower low than this. So lower lows over and over and over again until you reach your reversal point. Now, with that being said, let's get into the flat portion now. So we're going to be looking at the flat portion of the previous macro versus the flat portion of the current macro. And this is going to look a little bit different than how I usually show it. I removed all of the noise from this chart. Everything is gone here except for what I want to show. So you have your flat portion of the previous cycle right here. And again, it's not flat, it's a downtrend. It's lower low right here, and then another lower low right here, lower high. So lower low, lower high, lower low, lower high, lower low. And then you get into the bull cycle, which is a straight line. That's what we're looking for, a straight line out of this resistance. And then over here, same thing. So you have a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and your all-time low, which is your reversal point. So we'll start from the beginning where you drop down to your flat portion. This is the quote-unquote first bottom of the flat portion. So it's choppy, you gap up, and then you have these three peaks here, which breaks above the 200 EMA, which is this yellow line. So over here, it's the same thing. Dropping down to your flat portion, very choppy, you gap up, and then you have these three peaks poking above the yellow line, the 200 EMA, which is also under the resistance. These white lines are the macro resistances that I showed in the last slide. They're the exact same line. Running it down from the downtrend, I'm running these from the top wicks. It's the exact same trend in both cycles. So 3 peaks poking above the 200 EMA, 3 peaks poking above the 200 EMA. Then you have the W move. So you come down, you bounce up, you come down, a higher low, and then you break out of the resistance and break above the 200 EMA. And you also do not come as high as where you drop down to the flat portion. So this breakout move, you're not coming as high as where you drop down to the flat portion. So again, a lower high. Over here is the same thing. So you drop down, you gap up, you get your 3 peaks poking above the 200 EMA, and then the W move. So right there, bounce up, higher low, break the resistance, and a lower high than where you drop down to the flat portion, also breaking above the 200 EMA. And at that point, the 200 EMA actually pokes through the resistance as well on both sides. When you get this breakout move, this fake out move, the 200 EMA now pokes outside of the resistance on both sides. Now from that move, you pull back down into the resistance, and this is where you get your second and third bottom. So your second bottom, another lower high, the tri-peak, and then your third bottom, another lower low, the all-time low landmark, the reversal point. And then over here is the exact same thing, falling back into the resistance, your second bottom, your tri-peak, a lower high, and then your third bottom, a lower low, the all-time low reversal point. If it helps, look at the area under the move itself. Don't look at the candles, look at the area under this move. So your second bottom and then your third bottom compared to this. Your second bottom and then your third bottom all-time low. So that is pretty much it. This is where we are. And then from the third bottom all-time low, you form a very choppy uptrend up to a point, January 15th, where you gap up, and that is the end of the macro. That is what we're looking for now. This is an uptrend. It does not look like much, but this is higher highs and higher lows here. In an uptrend, we're looking for a gap up. That is the go signal. We see a gap up here, it is time to straight line to the moon. That's what we're going to be looking for. Again, the flat portions are pretty much a year in length. So the previous was 2020 to 2021 when we squeezed, and the current is 2023 to 2024. And this trend line, as I've mentioned multiple times, is not the same as this trend line. This is our halt line. The previous macro, we were not halting off of this trend every single time that we touched it like we are right now. And that is because of the amount of volume, the retail interest, the volatility behind that line is not the same as the previous macro that we saw back here. So that is pretty much it. Another thing, we're meeting this trend, our halt line, we're meeting this at the end of the month. End of December, very early January, the first 2 or 3 days of January, we are meeting this trend line, our macro resistance, our macro halt line. We are meeting this at the end of December, very early January, and more than likely, we're going to be meeting it sooner. Like the previous cycle back here, you do not get dragged out all the way to the point of this resistance. You form the uptrend and then you gap up. So I'm not expecting to go dead flat here all the way to this point. I'm expecting this uptrend to continue into the resistance. If not, it starts to get vertical here. I'm not expecting this to, in my opinion, we'll be meeting this line sooner than January. And in saying that, we'll be also squeezing sooner than January. And another thing about this trend line, this is, the macro resistance of the current cycle, the macro resistance line. This trend line intersects zero January 31st, 2024. So within a month and a half, this trend line will be hitting zero. And this is our macro resistance, the trend line that we have halted off every single time that we've touched it for the past 2 years. This is our macro resistance line. It's pretty much a vertical line at this point, straight down. This line is hitting zero January 31st, and with the current uptrend that we have, we will be meeting this sometime middle of December to end of December. And when we break this line, this is what we're looking for right here. You break the trend and it is legitimately a straight line. And the current cycle where we are, when we break this, not only is it going to be a straight line, but the volume is going to be insane, and it is going to be extremely volatile to the upside. This is going to be a melt up in a very big way. And again, this is going to line up with S&P 500 breaking 460 and heading for all-time highs. When SPY does that, SPX, whatever, breaks 460, that is confirmation of a bull market, and it will see all-time highs, and almost everything else will as well. And like I said, most tickers across the market right now are at their all-time low landmark and trending upward, reversing from their bear cycle. They are now reversing into bullish cycles, and the meme basket is, like I said, their bull cycle is generally a straight line. So that's what we're going to be looking for. One other thing, and I'm just going to be fully transparent here. So, and I'm just going to name drop. Nick Pantano, fucking melon, absolute melon. I don't know if he realized it or not, in saying that AMC is going to $4. He's betting on zero, whether he realizes that or not. If we break this level to the downside, we are going to zero. Now, I don't see a world where that happens. It doesn't make sense. It doesn't make sense fundamentally. But if AMC breaks down from this, we are going to zero. There is no $4 and then, maybe from $4 we start uptrending. No. If we see $4, we're going to zero. Another one, Booksy. I'm just gonna name drop. I'm over it. I don't care. I can't even be bothered anymore. I don't care. $15 and then $1 baffles me. It doesn't make any sense. Again, if AMC saw $1, it's going to zero. That would be a macro break to the downside, rather than a macro break to the upside, flipping to a bull cycle after nothing but red for the past 2 years or 3 years. If we did break to the downside here and head for $4 or head for $1, this stock is going to zero. I will be done with this stock if we break down here. I'm just being fully transparent. And again, I don't see a world where that happens. I really don't. It doesn't make sense, especially fundamentally with everything we have going on for us right now. So I think that's it for the video. I mean, this chart really says it all. All the touch points are perfect. The crosses of the 200 EMA are perfect. Pokes out at the same time. You get the fake out, the 200 EMA pokes out of the resistance as you see it here. And we are, the range here of this price action is so tight. Barcoding, very, very tight, coiled price action, getting ready for an explosive move to the upside. And that move will come when we break this trend. Like I said, this is the most important line on AMC, and we're meeting it end of this month, if not sooner, if we're uptrending into it. So that's pretty much it for the video. That's it. And then another thing, the Fibonacci spiral. This is just, I don't have, what else can I say? What else can I say? This looks amazing. And this breakout and retest is on volume. Pretty much all-time high volume. Not to mention the RSI has been oversold in the weekly for, 6 months now. There's really nothing else to say. This chart is plain as day. Bull cycle, bear cycle, bull cycle, bear cycle. Like I said, calling this the flat portion is kind of misleading. Because it's, it is flat, looks like it, but it is a downtrend. It's lower lows and lower highs to the end point right here, which is your reversal point, and then you get into your bull cycle, then the bear cycle, the flat portion, which really isn't flat, it's a downtrend. This is a downtrend, and this is a downtrend, and we're meeting our macro resistance very, very soon. And when we do squeeze, GameStop will squeeze at the same time, and more than likely, a lot of other tickers will be squeezing at the exact same time. So that's it for the video. You know, I said for a while now that it was going to be Chop City here. The price action is just going to be Chop City. We're just going to be moving to the right every single day, getting closer and closer to this trend line, our macro resistance. And when we do get to it, we're looking for a gap up and a straight line directly into our squeeze. That is what we're looking for. So that being said, I'll catch you guys tomorrow with an actual update video going over all the charts. I'll probably cover GameStop as well. And I'll cover SPY and everything else. So that being said, I'll catch you guys in the next one.